but it seems nuts to me that the stock has fallen so sharply that it's trading at about like 11 or 12 times 2025's earnings. And just the absolute negative sentiment that's being faced towards it. And you have more experience than me about these things where you're looking at a stock and trying to figure out, okay, is this short-term blip? Is this a 1 year rough year? Or is this, a genuine, the start of its ultimate decline? Emmet, how are we getting on?
Howdy, Mike. We're back in action, just the two of us.
Yeah, it's been a while. It's good to see you.
Like the Sister Brothers. I saw that movie over the weekend, a wild odyssey that reminded me of us two on this podcast. Right in the wild west of the podcast world. I'm doing good. How are you?
I'm good. If we're giving out movie recommendations, I went to a movie called Sorry Baby there at the weekend. Would highly recommend. Did not remind me of Me and You, but very, very good. But yeah. But,
is it a thriller? Is it a drama? Actually, sorry, I know I don't want to deep dive and make this a movie podcast, but we all love our movies. Is it a thriller?
Yeah. No, it was a drama. Very good. It was written, directed, and the main actor was all the one person. So it was a very impressive individual feat of filmmaking.
Okay,
but very good. Very tough topics dealt with very realistically.
Wow.
But you're right. This isn't a movie podcast, and I don't think anyone is tuning in to hear movie opinions. But so much going on. It's tough to really narrow it down to 45 minutes. Where should we start? Well, obviously, we need to start with Elon Musk getting another 30 billion quid, not a bother to him.
Yeah, why not? Just throw it on the pile there.
Just exactly, throw it on top of the pile.
Yeah.
Mad stuff. I mean, considering how much effing up he's done in the last 18 months, 2 years. The little $30 billion paycheck is an interesting one. But look, I do think that there's a nuance to that story, and we do like to hate on Elon Musk because he's a bit of a lunatic. But in fairness to him, and I don't say this lightly because I don't particularly like being fair to Elon Musk, the original deal, the whatever it was, it ended up being, I think, 56 billion in stock options if he got the stock from, I can't remember the exact numbers. Was it six?
It was an absurd. It was a lot of zeros.
60 billion to 650 billion or something crazy like that.
I remember it was shocking. It was shocking beyond belief at the time, but now it's just another.
And what he did, and he did that. And do you know what I mean? It was the shareholders rewarding him for that. He went and did it. Everyone was happy. Everyone got paid, and then the courts got involved and said, "You can't just give someone 56 billion quid." So I think there is merit to it. I also think Tesla needs to keep him around. He's such a cult of personality, especially at that company. I don't know what that company would look like without him, but I know it's mad as well. 30 billion quid, not a bother.
He's definitely the person we've spoken most about in the lifetime of this podcast of 250 odd episodes, because he is the Steve Jobs of this particular generation, of this era. Like if we just went back 20 years, Steve Jobs was that visionary that was reinventing industry after industry after industry and doing it. He created indigestion along the way. And when you read his...
also secretly a dick, really.
And Walter Isaacson kind of captured his character quite, I presume, very well in his biography on Jobs, which, by the way, afterwards, Tim Cook came out and said, I didn't quite recognize Steve from this book. So he can't say it's the perfect thing. But Isaacson then went on to write Elon Musk's biography. And it's sitting behind me somewhere on a shelf, unread at the moment, because the book is still being written in real time. There's no point in talking about Elon Musk unless you've decided you're just going to make it your full-time profession, because it changes so fast. Like even that thing, 29 billion compensation package approved in any other time or space would be world business news, but it probably doesn't even get, a 2-inch column in the Wall Street Journal. Well, it probably does, but that's about it. And tomorrow, as they say, today's paper is tomorrow's fish and chip shop wrapper. And it's like 29 billion. And you're talking about the richest man in the world. Will he do anything in his life different as a consequence of getting $29 billion? And the answer is no. I mean,
No.
if you'd given him $1, the life he's about to lead from this point forward would be no different to that with a 30 billion paycheck. So it's an odd thing, really, that an amount of money that could save a nation, could save millions of people, could reinvent industries, is still just a 29 bill. And we all know they have to keep him. I mean,
They have to
Tesla
keep them.
can't
Yeah.
lose Elon Musk. We see its strategic barriers to entry are slipping, and the competitive battlefield is intensifying. And the future of Tesla seems to be now tethered to self-driving and by association AI, and as this wild sidebar project, the Optimus robot. So you
Yeah.
kind of need him in the driving seat to not only articulate that vision, but more importantly, to bring it, land it. So give him 29 bill. There's the keys of the car. Or sorry, keep the keys of the car, Elon, and let us know how you get along.
Yeah. 29 billion quid in a day, and his favorite activity is to argue with people on the internet. Maybe we're
Yeah.
all billionaires.
Mm. Mm.
Okay, before we get into the rest of the show, Emmett, we need to talk about InvestiCon. 2 weeks
Oh,
time.
yeah.
Very excited.
Look, folks, listen to me. It's in 2 weeks from today. That's 21st of August, Thursday, 21st of August. And InvestiCon promises to be small. I mean, deliberately small, but very, very impactful. And when I mean small, it's going to be outsized in its impact, but we're going to have circa 80 people on the floor of the Irish Stock Exchange, the historic trading floor of the Irish Stock Exchange, for just one afternoon. And I have a deal for our listeners that's going to cause a degree of distress. Did you ever hear a deal so good you're like, oh no, I can't, I have to buy this? Well, here we go. If you subscribe to Horizon today for $699, which is something like €599, we'll give you a ticket to InvestiCon worth €449. So it is an amazing deal. We're only going to do it for 5 people. Email pod@mywallstreet.com. So why would you want to subscribe to Horizon? Why would you want to go to InvestiCon? Well, InvestiCon is the first of its type. It's the Comic Con for investors. And I've said it in previous podcasts that I always kind of had an idea that there is a place, there's something required for retail investors who want to meet each other and find outstanding ideas. So we have experts, which we've spoken to in previous podcasts, about AI, about whiskey, about 10x, 100x stocks, and even ETFs for wealth preservation. It's going to be fast. You and I, Mike, are on stage. We're going to interview these experts, 30 minutes each. What are your top 3 investments? Go. And we're going to have great debate about it. And apart from anything, you build an incredible network. And afterwards, you get a debriefing note and you'll have a laugh. So that's this day, fortnight, Thursday, 21st of August, Irish Stock Exchange. Email pod@mywallstreet.com today, and we will make sure you are sorted with a deal of deals. You don't want to miss it, because when we do another one, first people, top of the line, front of the queue, will be the people who attended this year. And we're going to, this is an MVP, Mike, like a minimum viable product. We're looking at it to see, are we going to bring this to Chicago, as we've been asked to do next Paddy's Day, and to Texas next September, and then indeed in August of next year as well for the other. So we've already got offers to do more of them, but we want to just make sure we do the first one right. So get your ticket, folks. Join the parade, have some fun, and support my Wall Street.
Very good. Very good. Okay. Today's episode, I think I'm going to kick it off, because I think this has to be the most interesting stock on the market right now. That's Novo Nordisk.
Oh, totally agree. Fascinating.
I mean, I'm kind of annoyed I decided to talk about this stock today, because there's so much stuff going on as we speak. So it's this Wednesday afternoon, August 6th. So yeah, it's really hard to keep up as we go along. And as we go, as always happens with this show, once we say something, it kind of becomes obsolete in the next 20 minutes after the episode goes out.
Or between us recording it and it be going, that's the worst. Oh,
exactly.
It's the plight of a podcaster. First world.
But yeah, I wanted to come back and update, because I think it was a couple of months ago, maybe not that far, 6-7 weeks ago, I did a wee pitch for Novo Nordisk typically kind of falling into the catch a falling knife status a bit, where I was like, well, surely it can't fall any further than this. It obviously did fall much further. So basically, what happened was last week, Novo Nordisk cut its 2025 sales growth forecast to 8 to 14% from 13 to 21%, and operating profit guidance to 10 to 16% from 16 to 24% growth. Obviously, that's a very significant cut to current forecasts. Stock fell 22% on the day. It's now down over 30% since the profit warning, more than 45% year to date, and almost 70% since its all-time highs back in June of 2024,
Yeah.
which is kind of nuts because all you hear about is how lucrative and how much potential and how profitable the weight loss market is
Yeah.
in the US especially, but globally too.
Now,
And like
remind me, are they the makers of Ozempic or Wegovy or something else?
Ozempic and Wegovy is both Novo Nordisk.
Really?
Yeah, so Ozempic would be the first product. It was initially the diabetes treatment, and then Wegovy was the specific weight
Oh,
loss
I
drug.
see.
Yeah,
Well,
and its current
yeah, every
global
day's a
market
school
share,
day.
100%, and its current global market share is 55% of the total global diabetes market for semaglutides, and 70% of obesity treatment for GLP-1 semaglutide treatments.
Mm.
So when you take that at face value, it's like, wait a minute, how is this all going on? All we're hearing about is the growth of this market. There's
Yeah.
100 million people in the US who could be potential clients. There's a billion people overall in the world that could be potential clients. And yet this stock is falling like a meme stock. It's like
Yeah.
GameStop in
Correct.
2022. Do you know what I mean?
Yeah.
So it's worth going into it. We discussed at length already on the pod what's gone on between compounding, competition from Eli Lilly. But I just want to zoom in on this product warning. Well, two things happened last week. There was a product warning, and then there was also they hired a new CEO who was an
Yeah.
internal hire. This guy called
Yeah.
Mazier Mike Dustar. I think everyone calls him Mike.
Mike Dustar. Yeah, that's
Yeah,
Dustar. DAR. Yeah.
Dustar. Yeah, he started in the company back in 1992, and it's a great sign hiring from within for such an important position and all the rest. But I think investors were hoping and expecting, given the importance of the US market, someone with experience there, and they didn't get it. So that is kind of a two-pronged effect on the stock. And it just seems it seems like everything is going wrong at the same time for Novo Nordisk. I think it's a perfect storm. So we talked about compounding at length. It's essentially during a shortage of drugs like semaglutide and GLP-1s had last year, the FDA allows for what are the equivalent to generics. Now these are produced hastily. They don't have the same approvals. They don't have the same safety warnings, all the rest. But they're there to replace a drug shortage.
Yeah.
The FDA has since banned compounding. These drugs are no longer in a shortage. However, compounders and Hims and Hers is the chief amongst them, but there's
Yeah.
plenty of companies that are doing
Yeah.
this. They've
Eli have
essentially found
rushed in with a product. I noticed Eli Lilly have a very good substitute product. I understand.
yeah, but Eli Lilly now would be in a different category altogether. Eli Lilly has its own proprietary information. So like the Mounjaro would be their Wegovy equivalent, and then retatrutide is their next generation weight loss drug.
Mm.
But they would be the equivalent of Novo Nordisk's products. They wouldn't be replacements. These are literally copies made up and allowed to be copied beyond patent laws for this drug shortage. However,
Mm.
these compounders are acting under this loophole called personalization, which means they essentially haven't stopped anything despite the ruling from the FDA in May. So this is where this story kind of gets hairy, because after the FDA outlawed compounding, Novo and Hims and Hers teamed up. The intention of Hims being a direct-to-consumer supplier for Novo Nordisk. Almost straight away, Novo canceled the partnership. They alleged that Hims and Hers continued selling unauthorized compounded Wegovy to large patient groups even after FDA declared the Wegovy shortage resolved. Criticized him for misleading marketing, sourcing ingredients from Chinese suppliers that hadn't been FDA inspected or approved, and essentially never made the shift away from its cheaper compounded products to the FDA approved Wegovy. So what happened was basically Novo Nordisk had a look under the hood of what Hims and Hers is doing and was completely disgusted. And it's really interesting as well when you look at the journey that Hims and Hers has been on. I mentioned how poorly Novo Nordisk has done in the past 14 months. Hims and Hers in just this year to date, it's crazy. It's one of the most volatile stocks I've probably ever seen. Stock is
Mm-hmm.
up about 150% since the start of the year, maybe a bit less. It tanked after earnings yesterday. So I just want to go through the quick journey of that 2025 so far. So
Yeah.
uh, in the first six weeks of the year, this was before the FDA outlawed compounding. The stock was up 150%. After that, it fell 60% in the next 5 weeks after the FDA made the announcement it was getting rid of compounding. No problem. We'll partner up with Novo Nordisk. In that 2 month period where the partnership was alive, the stock went up 150%. Novo announced the partnership is over. The stock fell 36% in 3 days. In the 6 weeks since, when it just decided it was going to keep calling its compounded versions personalization and not do anything different, it's up about 40 to 50% since then. It's been maybe the craziest 7 months I've ever seen a stock have in just the absolute whipsaw. And look, there's a lot of retail sentiment behind this. It's kind of got meme stock status as well. But it's nuts just how much this stock is doing so well and the business underlying it is doing so well in this gray area where it's basically been outlawed what it's doing, but it's still doing it anyways. And this is where it really comes into focus because just yesterday, and this is why I was struggling to get all my notes into one place at the same time because stuff kept happening. But Novo filed 14 new lawsuits to protect its US patents and stop the non-FDA regulated prescriptions of semaglutides.
Mm-hmm.
Interestingly, Hims was not one of the 14 companies being sued. I imagine it will eventually be one of them, but
Mm-hmm.
maybe Novo was going after smaller companies first, establishing a precedent, and then like a multi-billion-dollar company like Hims, which can fight back in terms of resources and money in a big long court case, might have a much weaker case if they've already ruled against a similar company doing a similar thing. So yeah, it puts it in a very weird status. And then obviously about half an hour before this podcast started recording, Novo reported earnings as well. So it's worth
Mm-hmm.
going through that as well.
Yeah, talk to me. I didn't
Um,
get to see it. I watched the share price in pre-market, and it was quite banal. There was nothing happening, so I presumed there was not a whole lot of info in the podcast. I mean, in the quarterly.
yeah. So H1 results, at a glance, they were up. Sales were up 16%. Operating profit was up 25%.
Phew.
These go up to 18% and 29% respectively when done on constant exchange rate basis. So if you take that into account and you take account the timing of Novo Nordisk's profit warning, going from 18% in H1 to 11% at the midpoint for the entire year just shows how
Mm-hmm.
bleak management sees the second half of the year coming. I'm just quoting them here. The lowered sales outlook for 2025 is driven by lowered growth expectations for the second half of the year, reflecting the persistent use of compounded GLP-1s, slower than expected market expansion and competition. The outlook is related to lower growth expectations for Wegovy in the US obesity market, for Ozempic in the US GLP-1 diabetes market, as well as for Wegovy in selected international markets. And yeah, I don't know. It seems so weird because on the other half of this, from the quotes from the earnings release, management has gone on to say that with more than 1 billion people living with obesity globally, including more than 100 people living in the US and only a few million on treatment, I am confident that under Mike Doustar's leadership, Novo will maximize the significant growth opportunities supported by strong product portfolio and future pipeline. And that's reinforced by the fact that the current market share is about 50%, 55% of the global diabetes market, and about 70% of obesity care treatments. And look, maybe it's this fallacy of getting caught up looking at the kind of status of right now or maybe the past instead of the future. But it seems nuts to me that the stock has fallen so sharply that it's trading at about like 11 or 12 times 2025's earnings. And just the absolute negative sentiment that's being faced towards it. And you have more experience with me. You have more experience than me about these things where you're looking at a stock and trying to figure out, okay, is this short-term blip? Is this a 1 year rough year?
Mm-hmm.
or is this, a genuine, the start of its ultimate decline? And it feels very strange to even say that about a company like Novo
Yeah,
Nordisk right now, but that's how it's being priced.
it
Like,
is.
that
Yeah.
was why I've been talking about the podcast. That's why it was a recent stock of the month. It was
Mm.
this kind of sentiment of, I really can't see this being its long-term outlook, the
No
way
way.
this market has priced it.
I couldn't agree more. I mean, I'm very seriously considering making it the next Horizon pitch, and I spent quite a bit of time looking over the business in the last 24 hours, as had you, in preparation for this. But a couple of things occurred to me. The first is that um, there has never been a drug, to the best of my knowledge, maybe penicillin, but there's rarely to never been a drug that has captured the world's attention to the extent of these GLP-1s, and Novo Nordisk are, in essence, the inventor of the drug, Ozempic, and as you explained to me, Wegovy. I can't believe I didn't realize that they did both of them. And there is such demand for this product. A black market is created, biosimilars are created. There's people meeting other people down laneways to get it. Now, that's fine, and there are so many perspectives on this company. But what kept coming into my mind when I looked at the share price crash, like as you rightfully said, it's down circa 70% from its all-time high, is how the market always overestimates the short term and underestimates the long term. Last year, as far as I know, Novo did about $31 billion in sales for their GLP-1 drug. I'm going to presume it's only Wegovy. I have to retire Ozempic from my thinking, but they did 31 billion in sales last year, and they're on track to do about 70 billion in sales in 2027. Right. So while there's this noise, there's a change of CEO, there's competitive pressures left, right, and center, there's regulatory pressures left, right, and center, there's lawsuits flying in and out the door at a pace that will be very difficult to keep. And I think you're very astute and on the money when you say they're probably starting with a smaller, weaker competitor to create precedence. And hats off to you. Should have been a solicitor. That sounds like the right plan of action. But right now, when I look at Novo Nordisk, I think when you just see that the level of revenue growth that is in the pipe with the other drugs it produces, as one of the greatest drug producers of our time, I do believe it's oversold. We could dive into metrics that are not very interesting for a podcast, like 35x free cash flow, and it has a whole ton of cash on the balance sheet, and like there's a lot of things we can analyze. But whether we decide, are we going to look at revenue growth, EV divided by revenue, are we going to talk about PE, are we going to talk about the ridiculous 85% gross margins, are we going to talk about the competitive battlefield? But when you cut to wide shot, when you go up in the helicopter and look down at 40,000 feet, is there any giant business that invented something wonderful, something life-changing, that didn't have an absolute tirade of Me Too's, attacks, legals? No way. The answer is no. So we are looking at a business that has nailed something the world wants. Now, I've often said on the podcast that an anecdote doesn't make data. And that's so we can throw anecdotes out. They're good for conversation. But I have an anecdote. I was last week talking to someone, and a friend of mine, and they'd lost a shed load of weight. And I said to him, "Oh, you've lost a lot of weight. How did you do it?" He goes, "I cheated." And he explained to me that he is on Wegovy. And I said, "Oh, wow, you're the first person I've met in the wild." In Ireland, I believe it's less prevalent, or like I'm sure if we lived in LA, every other person, that we know who was once overweight is now skinny probably took a GLP-1. But in Ireland, just it wouldn't be as noticeable. That would be just my perception. And he said, "Oh, I cheated. I went for Wegovy." And then he told me how obesity is a disease, and then went on to explain. I said, "How did it make you feel? Like what's happening? Like, tell me." And he said, "It's unbelievable." He said, "Where I used to go out every night and have 6 pints, now I go out and I only have three." And I said, "So why didn't you just decide to only have three?" And he goes, "I can't, because I've got a disease." And I thought that is actually a great summation of what's happening. Like, this person couldn't, just with their own willpower, would find it I don't want to say nigh impossible, but the compulsion to consume at a certain level is eradicated with this drug. And that was just an anecdote. But I was watching the New Scientist podcast because underneath it all, I'm an absolute raging nerd. And they had a really interesting show the other day um, where it has been proven that GLP-1 drugs don't just act to help you reduce your weight and keep it off once you stay on the drug, but they elongate your life. And I
Hmm.
immediately thought, rubbish, that's just because you've lost weight or because your heart is under less strain. But no, seemingly this panacea not only helps you stay in shape and reduces compulsions like biting your nails, but elongates your life. So really the sales pitch for that drug is pre-baked. Bringing it back to Novo, I see a stock that has been dumped as if the future is doomed. When in fact, every drug business is very complex. It's full of legals, it's full of patents, it's full of battles, and it's full of biosimilars. And the fact that a black market has been created shows just how much demand is required for this drug. They have the chemistry set ready, they're making it already. It will be in demand for a long time. What we just want to see now is this new CEO who came from within, and I presume most people don't even know who Mike Doustar is and what what's he made of. He's behind the curtain up until now. We want to see this person navigate this European giant into new waters, and God knows they've lots of other stuff in the pipeline. They've one called Carixima, and then they've RNA eye-based therapies. They have a whole big pipeline of other things that we're all just ignoring because the conversation is about the weight loss drug.
Yeah, yeah, yeah. It's true, and like the only pity about this is it's kind of been politicized as well.
Yeah.
With
Mm.
this most favored nation policy. Look, experts have said that's going to be so difficult to execute and
Mm.
actually put into place. But there's the threat there of, I think it's something like Americans are paying as much as 15 times some European countries
Yeah.
for these weight
Yeah.
loss drugs.
Oh, yeah.
Yeah,
And
and
many
then the
other
other,
injectables like Humira. In Humira, well, in Ireland, the most you can pay in a month for a drug as a citizen of the country, I think, is €95 per household. You go to America, I was talking to somebody who landed in America and had forgotten their TNF inhibitor, Humira, and AbbVie product. And they had to buy it. And it was like $6,000 to buy the shot. I mean,
yeah,
that's brutal. I don't want to say it's unjust because that has an implication, but it just America pays more. It's just whatever. But there are layers of problems in the healthcare system in America. It's wonderful if you're on the right side of the line, but it's not so good if you're not.
no, no. Okay, we'll move on from Novo. I think it's just a big evolving mess that is
Yeah.
going to be even bigger by the time this podcast goes out. But
Yeah.
what do you got in store for
Well,
this
you
week?
you flicked me on an email from Ben Carlson, which was a great read, and it was entitled
Mm,
"AI is Eating the Economy," and I really thought it was worth a quick chat. I know there's a risk that a lot of our listeners, a lot of people, are starting to suffer a bit from AI conversation fatigue. We talk about it a lot here in the Stock Club, and it's out there all the time. But I think it's more than fair to say that it's only just begun. Like the AI revolution, we're all like looking at it, and saying you're tired of hearing about AI, I think is analogous to saying you were tired about talking about cars after Ford released their Model T, which I think was in October 1908. So like 117 years ago, or 116 years ago, there were people in high society getting a bit bored talking about cars. Well, I think in 116 years from now, um, ChatGPT will be like the Model T of the industry. It is the brand that defines the birth of this new thing that we all saw in plain sight, and most of us with desk jobs have interacted with. And I think the industry will be even more impactful than retail automotive. A car for every home. AI is going to be more impactful in the next 100 years. Anyway, Ben Carlson, the guy who wrote the article that sparked this diatribe, said that when OpenAI released ChatGPT in November it was 2022, November 2022. It feels like longer, but when they released ChatGPT less than 3 years ago, the stock market had just bottomed out and inflation had peaked at around 9%, which already I'd forgotten. And at the time, loads of people believed a recession was inevitable, and it never materialized. And he says that the
Mm.
major reason why why that might be was the sheer scale of AI driven investment that followed. And without the tech sector's aggressive push into artificial intelligence, it's possible that the global economy would have slid into contraction, particularly after the added strain of trade tensions earlier just this year. So we can know for sure because, as Ben said, counterfactuals don't exist. So you can postulate about what might have happened had this other thing not presented itself, but we don't really know the alternative universe. Someone out there does. So I believe there's infinite number of planets, and there's someone out there going, "Wow, I wish we'd invented AI." But it feels like the moment when the narrative shifted, like AI isn't just a hype cycle; it's arguably propping up both markets and macroeconomic growth. Now, in the article that you flicked on to me, Mikey, Ben shows charts from Sherwood and the Wall Street Journal and the Financial Times, and they kind of all show the same thing. The tech giants are spending extraordinary sums of money in the AI arms race. Notably, the ones we always talk about: Microsoft, Google, Amazon, and Meta, especially, and they've spent between them 151 billion dollars on capital expenditure in 2023, and then a quarter of a trillion, 250 billion or 246 billion in 2024, and it's projected to surpass about a third of a trillion this year.
Yeah,
And
it's
that's a
mad.
40. It's insane. It's actually
I'd love to
incredible.
know how much of that, a percentage of that, went straight into Nvidia's pocket.
Oh, don't you know it? That's a
It's
very good observation. I mean, a lot of it did.
probably at least a third, if not a half.
We're talking about new sums of money where once when Stock Club started, or at least a couple of years before it, when my Wall Street was born, I wondered would I ever see $1 trillion business, because at that time I think Apple was setting new standards of $250 billion, and lo and behold, we've breezed past that mega milestone. There's a whole handful of companies that are multi-trillion-dollar now. And I now, the reason I mention that is you can see now even salaries being offered. Was it either Zuckerberg or,
Yeah,
yeah, Mark Zuckerberg offered a young fella, a 24
yeah,
year
he's in
old,
his 20s. Yeah,
yeah, 200 billion. Or sorry, what was it? 200 million a year
250 million a year for 4 years,
for
and
4 years.
your man turned it down.
Yeah. I mean, come
That's
on.
just nuts. Like,
So there's more and more big number. Like, the human brain doesn't deal very well with big numbers. We just don't. And I'm always conscious about, when we get on the mic here, rattling off numbers, very difficult for a listener to actually crystallize it. But I mean, 200 or 250 million a year, we all know that that is absolutely a mind-numbing, life-changing salary. Like, it's almost, you couldn't have imagined it a few years ago, just the way a few years ago I wouldn't have imagined there'd be a whole host of multi-trillion-dollar businesses. But even more remarkable is the economic impact that the spending is already having, Mike. And according to research by Ren Mac, AI-related capex is now contributing more to GDP than consumer spending,
yeah,
despite the fact that personal consumption typically accounts for about 70% of the US economy. Or, in other words, AI is no longer just powering stock valuations, it's beginning to drive real world economic output at scale, which we've probably, a lot of our listeners have read about, where, well, AI is going, it's the next industrial revolution, or whatever anecdote you want to spin on it. But if you just think about what I said for a second, that little AI helper that proofreads your essays or whatever is augmenting economic efficiency. So, as Ben Carlson said, there are two obvious paths from this point forward. One is that tech companies flame out and they're overspent, they've underdelivered, and the market punishes their exuberance. They just didn't manage to live up to what AI needs. And then the other path is that they dominate and they are backed by this transformational technology and reap disproportionate rewards. And the bus driver in Meta, Mark Zuckerberg, the bus driver in Apple, Tim Cook, and so on through those giant businesses know there's disproportionate rewards. And that's why they can go tap a young fella on the shoulder and go, here, do you want $250 million a year? Come on over here. And you go, no, I don't want to stay in my mom's basement or whatever. Like they know the future is AI. So, I mean, it's possible that both realities coexist, that a pullback it happens and then there's a rally, or we land somewhere in the middle, and no one knows
Yeah.
for sure. But I have 5 fast fun facts. Is that onomatopoeia? Five fast fun facts about AI's future.
Five fun fast facts.
Is that onomatopoeia or assonance or neither? Oh,
It
I don't know.
is not assonance.
It's
What's
just
the
good old
word?
rhyming, isn't it? Assonance is internal vowel rhyming, is it?
No, what's the word with all the words start with the same letter? I can't believe I can't remember this.
Come on,
Mr.
you did
Quilty, my English teacher, would be
me. I'm just
murdering me.
yeah. Anyway, I have 5 fast, fun facts about AI's future. The first one is that AI could add $15.7 trillion to the economy by 2030, which is currently more than the output of China and India combined. And that's according to PwC on their most recent Global Artificial Intelligence study. The second fun fact is that by 2026, just a few months away, over 80% of enterprise applications will have embedded AI capabilities, which is up from 5% in 2020, and that's according to Gartner and their AI forecast. And we as digital natives see everything is like, you finish a Zoom, AI writes up notes. You go to Slack, AI wants to. They're all at it. The third fast fact is training large AI models like GPT-4 can actually cost more than $100 million per model, which is driving massive infrastructure improvements and investments, specifically by Microsoft and Google. And that's another report I got my hands on through AI called Semi-Analysis for 2023. My fourth and second last fast fact is the number of AI-related patents filed globally increased 6x from 2015 to 2023, and another 6x from 2023 to this year. Scary. And China and US are leading the charge. And then the final fast fun fact is that the top AI data centers under construction this year will use more power than many entire countries, including Ireland and Portugal and lots of other countries of similar size to our own. They're going to use more power than the whole of Ireland, even when we switch on the kettle on Friday evenings.
Yeah. Yeah. I mean, alliteration, by the way, was the word we were looking for.
Alliteration, our old friend.
Obviously.
Of
People
course.
screaming at their headphones right
Well
now.
done.
But yeah, there's a lot to unravel there. I mean, the big thing is the ROI. Like these companies, these are the greatest companies we've ever seen in our lives. Like the Magnificent Seven will say, they've built up these cash piles. They've built up incredible businesses that spit out unimaginable amounts of free cash flow. And what management decide to do there is reinvest it into the business.
Yeah.
Now what they're doing, and then in fairness, like these tech companies are always built to create long-term growth. They're not like before, say, AI was a thing. They weren't built to be like, yes, we'll get all this money and we'll redistribute it to shareholders eventually. That's not their goal. No. Now with AI, it's lit the fire under them because for the first time, say, they've seen genuine threat. It's a company like Google, like I think Warren Buffett said it had the best economic moat he's ever seen in his life. And that's a fellow who's watched, 2 generations of stocks go through. But then OpenAI comes up and generative AI comes up, and it's like, okay, well, now here is a legitimate threat to this dominance. Facebook is the same. Amazon, Microsoft, they've all got involved heavily with their checkbooks to the point where there's never been spending like it, especially focused on one sector. When and if that comes under question is kind of what the market as a whole is teetering on. because it just feels it keeps feeling stretched and stretched and stretched. But then these businesses, Microsoft turns around and Microsoft Azure is growing, over 30% a year. Like this is a $1 trillion business on its own, Microsoft's cloud segment. And I'm kind of rambling now at this stage, but it is kind of ridiculous to see how much money is being spent and how okay the market is with this money being spent right now,
That's a very good point.
without expectations just
Without
yet. And
expectations.
when those expectations come to call, what's going to happen?
Yeah.
And maybe they don't. Maybe people are like, okay, well, this is a long-term plan. These companies haven't failed us in the past. We're okay with trusting management to go spend this money until we see this next generation of technology truly provide ROI. But I don't know. It's really up in the air, and it's true that the entire market is kind of leveraged on this point.
Yeah.
So yeah.
Yeah. In fact, that's a lovely segue for me to just replug InvestorCon, because we've Eric Bleeker flying in. He has the Best AI podcast, and he's going to tell us the 3 stocks that are most likely to benefit from the rise of AI. So I'm very much looking forward to that conversation. August 21st, folks, put in your diary, buy a ticket today. But it really is like it feels very much to me like the internet in the late 90s, where it was very evident a sea change was happening. It was equally evident that there were a whole ton of companies that had hopped on the back, and some were investable via the stock market. And then within that bag of coal, there was a diamond called Amazon, or maybe you might say Yahoo, although it's risen and fallen since. But there were giant companies in the making, and we're looking at them in plain sight at the moment. Whether we're talking about Lemonade, as we've spoken about in the podcast before, AI insurance disruptor, or one of the giants that we've just discussed, there's no question or doubt that we are in a privileged position to be here in August 2025, as opposed to August 2035, when I wouldn't like to say the party's over, but the mega growth has happened. I think we're going to see some mega growth in the next couple of years. And when you just reconsider the things that Ben Carlson said, that the AI capex tree from these giants, they're not spending hundreds of billions of dollars on a hunch. There's a team of MBAs and data scientists who have analyzed every angle, and they're in an arms race. So, we are here to find a business that's going to grow 2x, 5x, 10x, and 100x, and own it for that journey.
Yeah, absolutely. I think that's a good way. That's a good way to end the pod there. And just the potential that's out there right now, and the opportunities that are going to come down the line, even if it is a bit all up in the air right now. And unfortunately, I think the power and resources are definitely concentrated at the top. But yeah, it's the opportunity to go and find out who's going to be the greatest beneficiaries. Maybe not the spenders, but the people who are taking in the money. And that should be the next quiz. And that's actually someone we should get Eric Bleeker on at InvestorCon as well, because I think he'd have some really interesting insights.
He certainly will. Before we go, do you use ChatGPT every day?
Every day, probably not, but I'd say 3 or 4 times a week.
Are you a subscriber?
I think I'm on your subscription, or my Wall Street subscription. I'm not sure which is which.
It's I only went through my monthly bills there the other day. I realized I'm paying ChatGPT $30 a month. But yet, I also realized...
You can probably start charging me a commission, I think. I'm using some of that.
Well, but I also realized that it has reduced my use of Google. I'm going to guess by 90%. So I'm fact-checking via GPT. I take a photograph of a whole pile of vitamins that I take, daily vitamins, and ask them, when can I take these together? Should I separate? And it just with the it just has so many applications in my life that it's now an indispensable tool. It's become a utility, and they're taking 30 quid a month from me, where Google went, here you go, we'll throw you a few ads to mind us.
Yeah. Different ways of monetizing, I suppose.
For sure.
Okay, so on that note, Emmet, I'll send you just send me an invoice for the ChatGPT use.
I got GPT to do it.
Yeah. Okay, Emmet, thank you for joining me, and thank you everyone for listening. And that's it. We'll talk to you next week.